So thank you, everyone. We only have an hour to discuss some very important topics, so we might as well get started. I'm very happy to moderate this session to look at mainstreaming issues. And we have a really great panel to discuss that today. Naig from the French Development Agency, Eva from the European Investment Bank, and Matthew from Poseidon. Can you introduce yourself perhaps in just a few words briefly for our audience? And so you have the mic. Naig, maybe you go first.
Okay, so Naig Cozannet, I've been working for almost 25 years now in conservation with a mix of experience from the NGO side to the donor side. I'm in AFD since 2003. I started as biodiversity officer and I've led the corporate responsibility program for a while, and then being a project manager. And now I'm in charge of coordinating efforts to mainstream biodiversity in all sectors of investment of our group. Thanks. I'm attached to the director of the ecological transitions and natural resources in our group. Thanks.
Thank you, Naig. I think we have a very similar job description here. So I'm Eva Mayerhoffer. I work for the European Investment Bank. I lead the biodiversity agenda in the bank, also responsible for mainstreaming biodiversity in all policies and economic sectors at the bank. And I'm also the CBD focal point at the bank in terms of coordinating resource mobilization on the part of EIB as part of the Multilateral Development Bank Group.
Hi, good afternoon, everyone. My name is Matthew McLuckie. I'm a managing partner at a company called Poseidon Capital, and we design financial products that have a positive impact on life on land and life below the oceans. So everything from green bonds to thematic public equity funds to private equity investments. And our clients are mainly large banks, asset managers, and family offices.
Okay, thank you, Matt. Online, we have Ray Victurine from the Wildlife Conservation Society. He's very involved in the field of conservation finance, and I've asked him to take notes and tell us what the NGOs can do in this and what the Conservation Finance Alliance can do. Perhaps, Ray, can you also briefly introduce yourself? To hear him, you, of course, need to have the headsets on.
Great. Yeah, thank you, Fabienne, and good to see everybody there. Ray Victurine from the Wildlife Conservation Society, and I'm engaged in working with businesses and working with financial institutions to explore opportunities to improve financing for conservation. And I'm disappointed I can't be there with you, but I'm looking forward to hearing my colleagues in the discussion today. So thank you very much.
All right, thanks, Ray. And so I'm Fabien. I work for Biotope. We're a consulting firm based in France, working on biodiversity from boots on the ground, doing field surveys, to having these kinds of very high-level conversations that certainly drive a lot of what we end up doing. So mainstreaming is a word that's being used quite widely. You've probably heard it before at the Congress. But there are multiple definitions and approaches to what that means. And so I'd like to get started by asking our panelists, what their definition of mainstreaming is, or how they approach this concept that people are using. So Matt, you have the microphone. What's your take on that?
Yeah, I think my take's pretty simple. I mean, every day we work with banks and asset managers who really, they don't know anything about biodiversity. They don't know anything about natural capital. They're starting to understand a bit about climate-related risk. And there's trillions of dollars going around international capital markets every single day. And I think for me, the mainstream of biodiversity is when the people who start pricing risk and analyzing companies and different mainstream financial instruments of bond markets, equity funds, passive indexes, etc., when they actually start pricing the materiality of biodiversity loss and gain into their investment decisions, that's when we'll actually start moving money away from companies that are having a negative impact on biodiversity towards those that are having a positive impact. And I don't think it's necessarily about recreating the wheel. It's about using what markets do every single day to be more effective at incorporating and pricing biodiversity materiality.
Thank you.
Yeah, thank you, Matt. For me, mainstreaming is the word that our community has found to sort of have a hope that we could transform, or has this transformative way of building our economy, so that we turn to a nature positive economy. And I realize that it's now 2 years that I have the job to translate that into operations in my organization. And I still realize that we need a common language, to talk about how we implement that. And I came to the idea that it's transforming the way we're looking at responsibility. So far, we've looked at responsibility in terms of mastering our negative impacts. So it's based on the full box of the mitigation hierarchy, for example. And we have to come to a responsibility around being able to keep nature in good health. And that's a different way of measuring impacts. And we need to change the reference on how we measure impacts. We need to measure not the impact towards the business as usual and saying we gain something when we neutralize our negative impacts, but we have to measure impacts towards the ambition. So at the end of the day, it's how we align our investments to the post-2020 targets when it come and be designed. So that's really a transformation of our organization, and we're doing that at AFD at the moment, and also a total transformation of our decision making.
Thank you, Naig. So for us, I mean, very similar, of course, AFD being also a multilateral financial institution. So I think we have pretty much the same type of mandates, but also for us, it's going back to putting, as Naig very eloquently put it, nature at the center of economic growth, and changing, not using GDP, so putting nature at the center of, GDP as a measurement. But it's also about valuing the socioeconomic benefits of nature, integrating those into our different policies, whether it's social development policies, gender policies, so all through the bandwidth in terms of the policies, looking at the risk side of it, but not only of our operations, but of our clients also, and our own financial risks that we have if we don't integrate biodiversity or nature considerations, and the positive agenda. So the positive agenda is also a very important part of it, meaning looking at shifting the financial flows from business as usual to more nature positive investments, whether it's looking at reducing the drivers or making nature positive investments that stand on their own.
Thank you. I would very much like now to hear your actual hands-on, if I may say so, experience at the EIB with this. You've been trying to do that for a while now, and there are a few lessons that probably you can share with us on how to actually make mainstreaming happen as EIB.
Yes, so I'll take a facility that we put in place with the European Commission in 2000. I think we started the negotiations in 2008, and it's called the Natural Capital Financing Facility. And it was supposed to be a pilot instrument to address really the market gaps and barriers to revenue generating or cost saving projects aimed at preserving natural habitats and integrating nature-based solutions for climate adaptation. So the facility is coming to an end. It looks at projects mostly all within a very well-regulated environment, so EU member states. And that's going to be the difference, let's say, compared to AFD that looks at developing countries. And here you have, and it was a very interesting experiment. Some successful projects that we managed to have, some less successful. And I'll take you through some of the lessons learned. So the Natural Capital Financing Facility, or NCFF, allowed us to reach operations that were below the minimum size or beyond the normal risk spectrum of the bank. So the bank is very conservative. We don't, we try to break even. We are not a profit generating bank, but we have very conservative risk management colleagues who look at it from a very conservative point of view. And so these small projects were high risk, and they were wondering, why the hell were we trying to do these projects, and what were the benefits of doing such projects? And I think Matthew was one of our first guinea pigs with Rewild in Europe, and he can tell you about the painful process he had to go through in trying to make those investments bankable and run through the hoops and requirements of our risk management colleagues. But so out of that, one thing that we realized very quickly is that because of the issues, especially with collateral, with generating revenues out of these conservation projects, which was very difficult to structure. Most of the clients that approached the bank were not very experienced in structuring deals, and then we wish we had more of the Matthews to help them, assist them in structuring these structures. Sorry, we have a bit of a technical issue. And one thing we found was that nature-related investments were typically embedded inside larger investment programs. It was much easier to embed a natural capital component in a larger infrastructure project or in another program, for example, social housing, rather than have them stand alone, because it was the larger project that took on the risk. We also had the market needing more regulated investments and revenue streams in order to reach the potential, as well as higher sustainability standard and risk awareness to drive the mainstreaming of biodiversity at all levels. This was not a given, certainly not when we started out in 2010. I think this has changed and we are moving towards this, but in 2010, this was very difficult, and the market was wondering, why are we trying to do something? There was very little, incentive to do so, and certainly regulation. You didn't have the ECB guidelines asking you to mainstream biodiversity risks, or the European banking authorities, and you certainly didn't have the sustainable finance regulation, which is a driving force for us. The biggest problem that the bank had is that a lot of conservation projects require land to do a lot of the ecosystem restoration. While land is, for most multilateral development banks, land is not an eligible cost. We do not finance land purchase. So what do? We can finance anything above ground, so anything that grows on the land, but we can't finance the actual land purchase. And this was usually a substantial part of the overall project costs. So who would be financing those lands? And this was, I think, one of the biggest barriers to conservation projects and restoration projects in general. And there is a logic or a reason why, is because the multilateral development banks, and these are all public institutions, don't want to engage in potential land speculation. Interestingly enough, when most of our conservation clients in the EU were not very familiar with the standards. So whether you're speaking about IFC performance standards, requirements, EBRD's performance requirements, EIB's environmental and social standards, and suddenly they were going to have to deal with issues that or requirements that we were imposing on them that went beyond required regulation and legislation. It goes from, requiring management plans. It goes from actually taking into account and mainstreaming social dimension into conservation. So looking at the gender aspect, looking at the impacts on vulnerable communities. And this is not a given in a well-regulated environment where the stakeholders are not as close to ecosystem services and managing ecosystem services as they are in some of the developing countries. So this has been quite difficult. Also, and then I'm just going to pass over just one more point that I'd like to raise, is the fact that landscapes are generally not acknowledged as a productive asset in themselves at the EIB. This is changing, but at the beginning, this wasn't the case. We couldn't associate an asset class or what we call a NACE code. So it was not an economic sector. And how do you translate that, especially for our intermediated operations? If there is nothing you can classify it in, for our risk management colleagues, it ends up being extremely difficult to understand what is it that you are putting a credit rating to, and what are you pricing actually? So those were some of the complications we've had to deal with. And of course, the size of those projects were very small. I mean, they range from about 1 million to 6 million tops. And when you think that the total project investment costs for us is 15 million at the minimum before we start considering those as direct investments. So the last point was that this facility included technical assistance, and this was the key value added of such a facility. Without the technical assistance, we would not have been able to do any of the projects. It required tremendous amount of hand-holding, and the technical assistance, either for project preparation or implementation, was absolutely critical. So trying to do some of these natural capital type of projects without the technical assistance or without a grant component was, and I think today even, is pretty much impossible. So I'll stop there and pass on to...
Yes, I'm hearing that it's difficult to get private financing to go towards these biodiversity projects without help, either from grants or technical assistance, public funds. Do you have the same experience at AFD?
Yeah, we know that public itself will not manage to fill the gap for biodiversity finance. We've had the little book on biodiversity nature investment, or investing in nature, very recently this year, and we know that from the 150 billion euros that are on the table now, mainly from public budgets from the OECD countries, actually, to the nearly 900 billion we need to cover for the costs of the post-2020 ambition. I mean, the private sector is surely needed. And it's not only money, it's needed in terms of transforming or investing in new practices, investing in new ways of doing things. It's exactly the same story that we had with the climate finance. We're looking at sectors which are actually legally impacting nature. And now we try to turn into businesses which are nature positive, and they have tremendous investments to do. So it's also their own need to have a fund to support innovation. But the experience of AFD is not as long as the EIB for that. Our main experience in blending investment for conservation is around the investment that the community needed for protected areas. So we've put some blended finance and technical assistance to, for example, conservation funds, or also to support family basis businesses around protected areas, to support an economy that would help protect also the buffer zones around protected areas. But there, our mandate is very clear. Even in our countries, in France, usually speaking, the budget for a protected area or supporting poor communities is coming from a public budget. So there's no question why or how we should put public money in there. But now we're looking at transforming big businesses. If we know that the agriculture, the agro business is part of the threat to nature, one of the big one, we know that pollution is around one of the threats. So we're looking at big treatment plants. We're looking at dams. We're looking at infrastructure where the private sector is very present and lead the best practice of the world. So that we are looking at those companies and putting money in transforming those public money remains a question, because these are profitable or highly profitable businesses. So do we have a mandate as public bodies to help support the transformation of those businesses, or help them come to maintaining the natural capitals they have rights on? So it's questions on, I mean, we had a big company came to us last year. I won't tell you the name, but we all know this name. It's a global company, and it's a French one. Came to us and asked us if we could support with public money their transformation from their current. It was an agro-business company. The transformation from what they are doing now in terms of agro-businesses in the south to being green. And our first reaction was, but you are part of the problem, guys. I mean, you did the job for destroying your soils. You did the job for destroying productivity, natural productivity. So why should now our public money help you raise this profitability on soils? Don't you have a part, and don't you have a responsibility there? And if we all know that putting money in nature positive practices will be profitable, we say that. I mean, as a conservation community, we say, yeah, invest in nature, it will have return. But the problem is that return is both for the company and both as a common good. And how do you cut in between what the general people will have as a return and what the company itself will have as a return, and what part of the return that the company gain from having good soils or good practices should go into their profit, their own profits. And that's around those questions that AFD and other public donors have a real job to do in being sure that what share of the responsibility and what share of the return is between the private sector, private companies and what share of the investment or responsibility is in the public hand to support those transformations and those transitions. And that's we are ready to do that, and we are starting innovating. Actually, we are at the moment working with Posaidon. We're working also with Biotop and experimenting prototypes in new impact models. So we're not saying no. We're not, I mean, refusing to enter into this debate, but we face the questions as boldly as we can. And as I said, we need a common language here, because AFD cannot just decide that the share between public and private responsibility in the transitions is such and such. We need EIB, we need the World Bank, we need other public bodies to say that. So just to list a little bit what I see as challenges is, and because we're looking at other territories, we're looking at the developing countries, and it's a little bit different to transition economies from harmful to green in a developing country than it is to OECD countries. So the challenge for me is really a regulation around what is legal green. And we all know it's true in France, it's true in other countries. At the moment, some legal is harmful to nature. And then we have this lack, and then the problem is even higher in the country where we operate. So what are the good norms, and do we have the mandate to put our norms on those countries? So that's a question. Then we also have a problem with the target in terms of mainstreaming, because when we come in a country, really having the good targets for aligning our investments should come from the country itself. But we all know that NBSAP strategies, the biodiversity strategies, are lacking this bold mainstreaming part as well. They're usually around protecting areas, and it's not sufficient to define what transition we need. We also have a problem of data. We also have a problem for ecological monitoring, so that we can put credibility and trust around impacts, positive impacts. And also, we also have a lack of knowledge around priority sectors. For climate, we know now how to identify those priority sectors that make a transition. Well, what is it for a country, for a landscape? How do we identify those businesses that will make and also profitable businesses, because we need to attract private sector. Well, the opportunities are around the rising regulation that is coming now from TNFD or from others.
Can you spell out what TNFD is?
The task force on relating nature-related financial risks and disclosure. It's and it's a bad news that it's coming from a rising risk, economic or financial risks derived from degradation of nature, but we need those common frameworks. We also have an opportunity around new technologies to report quality of impacts and quality of natural assets, capacity to map those and give us the right map for aligning our investment. And we also have this climate finance experience, and I hope we can do leapfrogging on that experience too. So,
thank you, Naig. Matt, you're the private sector representative here, so tell us that you do have the solution, please.
Yeah, well, I think the good news is that, you know, coming to these conferences 5 years ago, everyone was talking about standards and frameworks and creating the rules for engagement for capital markets to actually start mainstreaming biodiversity. And now those standards exist. We've got the ICMA standards in the green bond markets and green bond markets, where use of proceeds are channeled towards eligible green projects. They've gone through $1 trillion in a very, very short period of time. If you think they're less than $200 billion only sort of four years ago. So green bonds are an area where biodiversity finance has been mainstreamed. And to give you a couple of examples, we're working on some green bonds at the moment. We're working with a protected area authority in Africa, where they're securitizing their green bonds. So they're borrowing money from international capital markets, so pension funds, sovereign wealth funds, etc. They're borrowing money securitized against future wildlife tourism going into their country. So gate fees into national parks, and they're borrowing hundreds of millions of dollars. And this is an emerging market economy. So yeah, there's that example. We've got securitized bonds versus carbon in Latin America. We've got sustainable timber securitized green bonds in Latin America. We've got a bond which is being issued by a development bank in Brazil, where the proceeds are going towards the local protected area authority to prevent infrastructure development on one of the free-flowing rivers in the Amazon basin, the San Benedito. So green bond markets have now got a robust architecture that actually enable funding from these institutional investors to be channeled towards on-the-ground conservation activities. And that's where data and everything also becomes important, but this isn't a presentation on data. I think picking up on something which Eva said, which is really important, is land. And we are losing land very, very, very quickly. If we look at the institutional investor appetite for hedging land security, be it for resources, be it for food, we're seeing sovereign wealth funds investing a huge amount of money into land, but for extractive reasons. And I think investors, as Eva said, specifically DFIs, they're very reluctant to get into land purchasing deals, but we see it as fundamental to the future of conservation finance. I think to be able to get around the issues of equitable community compliance and community partnership land purchase is really important for our field. And I think, again, it's looking at innovative financial structures to do that. So we're actually creating a stock exchange listed company though it's co-owned by communities purely for owning and leasing land for conservation purposes. So I think, again, it's about understanding what investment structures exist in mainstream capital markets, and then how you can utilize and exploit those structures using the language which investment bankers and asset managers use every day to actually create a positive impact for the environment. So I think those are just two examples. And I think the final point on land, just conscious of time, is land historically has been viewed as an illiquid asset class. And that means that it doesn't get bought and sold very quickly. What we're seeing now is that with the layering of different revenue streams, be it carbon-based revenues, so we're seeing a lot of REDD+ projects are now coming to maturity, again, through legislation that was put in place 3 to 5 years ago. We're seeing a lot of biodiversity finance, water crediting in the US and Australia. The valuation of land and the outlook on the value of land is changing dramatically. And as we see land and the secondary revenue streams from land growing, the value starts to grow. I think we're going to see a lot more volume and a lot more volatility in land markets. And that just means that land will be traded a lot more often. And that in itself will mainstream real estate and biodiversity connected to real estate values within the investor psyche. So I think there is good news, but I would say it's not necessarily about recreating the wheel, because the regulation and frameworks are there, they exist. It's just about understanding how you can apply that legislation and those frameworks to existing financial products, speak the language of bankers, speak the language of asset managers and family offices, and there are deals to be done. And I can say, because I have been the guinea pig for the EIB, it is painful, but it's worth it in the end.
All right, thank you. I actually think that's a good final note, and so I'd like to open for questions. No, sorry. I was going to ask Ray to give us a synthesis at the end, but Ray, do you want to add to that? Ray, are you there?
Yeah, yes, I am. Sorry, I was just unmuting. Fabienne, thank you. I guess I do have some comments on just briefly on that before we get into some questions. Just I think right now, in terms of our NGO sector, especially, I think we are sort of we're trying to make progress, and it's challenging on this mainstreaming, where we've kind of done a bit of good work on the idea of, as Naig had pointed out, on mitigation, trying to reduce the harm. But we really need to help kind of push this agenda of not doing the harm to start with. And that's something I think is going to take some time. That's the transformative part of it, which is really, I mean, that really means massive change to economies. And that's a huge challenge. But I think we have to, as the NGO sector, be engaged with the governments to push that agenda in terms of coming up with deals and attracting investment that will make those kinds of improvements. We have to be a bit more innovative in that way, I think, in terms of the types of instruments. So I think partnering with groups like the banks, with the EIB, AFD, working with colleagues like Matt to come up with new innovations, I think is going to be very, very important. I think we haven't cut enough deals. We haven't developed the potential for linking debt financing to meeting some of the targets. I think that's a great opportunity, and the issue using bonds to try to do that. A good role for us is helping to broker, I think, some of those deals. I think it's also important for the NGOs to focus on good data, good understanding, so that we can help make decisions on terms of how investments go forward and how monitoring needs to take place. This idea of building in technical assistance, working with donors, we're not going to be able to achieve a lot unless we can actually build some capacity at a national level and then at even local government levels to make some of these decisions regarding how investments should take place. So that idea of building up blended finance. I also think that we don't have a lot of luxury of time. I'd like to see some of the, I think Naig mentioned TNFD, some of the time frames for coming out with some of the targets I think are too long. I think we should move more quickly to try to put some of those structures in place, because as Matt said, we're losing land very quickly. And oftentimes we're losing land for what we think are good examples. Like, oh, we're going to deal with emissions or carbon emissions. So we're going to plant one type of crop, or we're going to do mining to produce batteries for vehicles that don't run on fossil fuels. But that requires destruction of land. It requires, it's going to lead to huge impacts. So how do we try to find those kinds of balances? So I think those are some of the issues and challenges we face. I think we need to engage with governments. We need to engage with the financial sector. We need to become more, how would I say, kind of fluent in the language of investments, so that we're coordinating and looking at some of these opportunities. So I want to just really thank the panelists for raising these issues. The risks to nature are tremendous. And right now, the systems that we have in place do not really measure that risk very well. So I think that these kinds of examples that we have here, and working to support the enabling environment so better decisions are made, are going to be really important. And I think that as NGOs, we have a huge role to play in partnering and coordinating with our partners in the financial sector. So thank you.
Thank you, Ray. You mentioned innovation as a key point, and I think, Naig, you mentioned in passing earlier some thinking that you were engaged in. Do you want to briefly share some of that before we pass the mic to the people here?
Yes, I think that as a conservation community, we all know now that we're not going to protect nature with dots of protected areas. We've come to the idea that it is all corridors or ecological corridors that we need to protect in a coordinated manner. So the same comes with green investment dots. And at the moment, what we realized in discussing and looking at past experience is that lots of those instruments that are investing in green assets are doing it without any other portfolio consistency. So it's dots on a territory, but it's not bringing transformation at landscape level. So we are now innovating together with Poseidon, together with Biotop and other partners, IUCN actually. We are now raising up a new impact model, and we think that real nature positive impacts should be attached to monitoring a transition at landscape level, so that when an investor comes in the instrument, is sure that the selection of projects that are making up the portfolio together, all the portfolio approach creates a transition at that level. And being able to do that is, as you said, Ray, it's a tremendous effort in terms of having the right technical infrastructure, the right data, the right transition. So being able to write actually this transition, to identify in the transition who are the businesses and also public investments which are leveraging this, and together with people like Matthew, being able to, in that map, put a business model that helps transition. So perhaps I can give you the mic, and you would give the investment model that could work with our innovative idea, because you've worked together with us. So I'm not a financial, I must admit, and something that I really learned in this journey is that we will win that if we are working hand in hand with financial people, financial profile who do understand and love nature.
There's a phrase being thrown under the bus, but I'll no. So this
is being recorded, huh?
Yeah, that's fine. No, the product that we're designing with AFD is actually stemmed from the progeny of a fund which I was managing that was one of the successful applicants to the Natural Capital Finance Facility at the EIB, and it's essentially just a simple notion where you take a landscape, and we view landscapes in terms of watersheds. So where natural processes happen, generally you can look at a watershed boundary. And it's about how do you plan out across a watershed for everything, for biodiversity, for climate sequestration, adaptation, for human planning, for wildlife, for food security. You've got to look at an entire basin, and then you can actually start developing an investment plan. And the investment plan takes place over the short term, and it takes place over the longer term. And I'm a big fan of debt, so fixed income finance. I think conservation equity is really, really hard, and there are very few examples of where it's worked. And you can't rush nature. You can't rush natural processes. I mean, we're doing a pretty good job at screwing up our planet very quickly, but the recovery won't take the similar short period of time to happen. So debt, you can actually structure over 30 years, 40 years, 50 years. You can get large-scale institutional buy-in for that. And again, when we look at the traditional conservation enterprises, sectors that we focus in on, so we're looking at timberland, we're looking at agriculture, we're looking at livestock, we're looking at tourism. These are industries that generate income. They're very good at generating a constant rate of return year after year, low cyclicality risk. And they're not going to generate you 6 times equity money in 4 years. It's just not going to happen. So fundamentally, our model is about investing in lots of different projects across a landscape, creating a network where the sum is stronger than the different parts. And I think, and it's using blended finance to do that. So there's a combination of TA, there's grants, and then the majority is fixed income and mezzanine capital at a landscape. So that's a very exciting new initiative that we're developing with AFD. And yeah, more than happy to discuss it with anyone else afterward.
Do any of you have any questions to the panelists on what they said, or actually have a new exciting solution that you'd like to share with us?
Hi, my name is Sahil, and I work with an indigenous community on conservation at the border between India, Burma, and Tibet. So over there in the mountains. I really appreciate the ideas expressed here, and I really appreciate the willingness of banks and private institutions to invest in conservation. I agree with the panelists on the importance of land and working with local communities, the ideas that you've brought up. But I can't help I feel that there are 2 parallel realities going on at this conference. There's the side on business and finance, and then what the indigenous representatives are saying here. And there's a fundamental difference in the way these 2 sides understand nature, land, and conservation. And many indigenous people and scientists who've been working with them have been speaking at the top of their voices about how businesses, governments, and conservation are destroying their lives, their identities, and the lands that they protect, and the biodiversity that lives on it. And this is when studies after studies, and I'm myself a scientist, have shown that 80% of the biodiversity currently lives on indigenous lands. And those are the ones that are being dispossessed most rapidly. Sorry for the long sort of build up. So just a final point that while countries may not have met Aichi targets, indigenous people have met them because they have kept 80% of the biodiversity on their lands. But land and nature for indigenous people isn't just property. It's identity, it's who they are. Ideas of trading, ideas of liquidation of land are antithetical to the very existence of the world's most marginalized people who are also saving the most biodiversity. So I finally come to my question. How do we talk about conservation finance without addressing that land needs to stay with indigenous people, and that we need to work with oppressive governments to let indigenous people keep and manage the biocultural diversity that they preserve? Thank you.
All right, thank you. Any volunteers to respond to that?
Well, my first answer is that the innovation, we have called it time for life. And so it's not nature, it's really something that is really bigger than that. So I appreciate your question and give what you highlight here. And finally, the problem we face is around finding a good governance model for this maintenance of natural assets. And as you've pointed out, in many areas where the governance on land and on land management and maintenance is given to local people or indigenous people or people who live in and have also a relation to nature that is, they are in nature, they are not using nature, ends in a better story than the one we've written when we have separated ourselves from nature. Well, having said that, and I work in the public donor sector for a while now, I must admit that the way we think investment, the way we think our ed is not totally fitted to what you mentioned here. So we're doing our best at the moment. IFD is having a growing portfolio of projects which are really working with the people you represent here in our protection portfolio. We do that in the Amazon, for example. We're doing that also in Assam, in India. But the question that you raise remain very hard questions, because they question the rights and the share of rights. And I do believe, and I'm convinced as you are, that if we don't confront that question, that we will go nowhere. And it's not the right only of your people, it's also the general way of how we distribute right, and what is at what condition we give anybody the right to exploit or valorize natural assets.
I think we're seeing a shift, and certainly do agree, and thank you for your intervention. But we are seeing also suddenly the conservation community realizing that they can't do conservation without, indigenous community, without their knowledge, without bringing them into the dialogue and the discussions. And what we are seeing now is an increased human rights responsive approach to conservation, and moving away from the classical conservation. It's only dawning now, right? And so we are at the beginning of that journey, but I think it's sinking in because of organizations like yourselves ringing the bell and indigenous communities becoming a lot more vocal, but also because of some of the tragedies that we've seen happening in the last couple of years, where human rights defenders, indigenous community leaders being targeted, being killed because they've been defending their rights on conservation lands as a result of investments on those projects. So I think there's a growing awareness. We are not there yet, but I think legislators also, especially in Europe, the European Parliament has put a bill forward on human rights-based or human rights, I'm not exactly sure of the title, but human rights and biodiversity conservation and biodiversity. And how do we start really taking that responsive approach? But it will take time, though Ray said we don't have time. And I think we need as public institutions to step up our game and to make sure that that dialogue happens and that we do take into account in our safeguard policies those rights, and so that we and I think that's you need to keep on leveraging, and you need to keep on making sure that we do deliver on those commitments.
Hi, thank you. Charlotte Opel from Forest Conservation Fund in Geneva. Thank you so much for bringing up this topic. It's a huge opportunity, but I definitely think that the restrictions that the banking sector has make it impossible to engage with these kinds of scenarios. For one thing, I don't really think that you can monetize a lot of the benefits in a fast way. The size of the areas that we work with mostly indigenous communities that have just gotten tenure over their areas, and we link them with companies to finance them, the conservation activities. The areas are small. It's very rare that you would have 100,000 hectares that belongs to an indigenous community, at least in Indonesia where we mostly work. It's more in the 7,000 to 15,000 hectare range. Good luck even getting a carbon developer to talk to you about that. So selling future carbon credits, I'm not so bullish on that. Ecotourism, yes, everyone, and non-timber forest products, it will happen someday, but these are communities that are just starting down that path. They may not want to go down that path. You can't force them down that path. So I'm not convinced about the business case for just pure conservation. Sustainable forest management is a whole controversial topic in itself, if that's really conservation. So yeah, I would just encourage you to, but the other thing is that it's actually so cheap to protect these areas. You have zero land costs. The people own the land already and they just want to protect it. So the opportunity cost of, I'm thinking about soy or palm, it's off the table. So the operational costs of protecting these areas are not that expensive. We're finding $40 per hectare per year, including satellite monitoring and excellent community livelihoods projects. So I really feel like there's an opportunity for huge areas, not that expensive, but not going to get a return on investment that the commercial banks are looking for. And so it's the development banks that somehow I think need to figure out how to not be so afraid of risk. It's not that much money you're risking. And there really are big opportunities. So yeah, please explore. Thank you.
It's a really good question. And I completely agree with you. I mean, again, let's not get into a carbon discussion. I do not believe blue carbon markets are viable at the moment. Or generally mangrove-based carbon is small community projects. There's no aggregator out there. There's just not enough sufficient scale. And I think I could alienate the audience here. I think NGOs have been pretty underutilized in recognizing their value, but also their responsibility in terms of dealing with communities and the power which they have to channel institutional capital. Because NGOs have been working in these areas for decades often. And they generally, you know, if you said that to an investment banker, we've got a partner who's been here for 30 years, they are very long in the tooth. There's a very, very high value placed on that partner, and they would get paid handsomely for it, let alone the communities that are part of the land. And to give you an example, so I worked at the London School of Economics on a paper which looked at sovereign macroeconomic risk and the bearing or material bearing of natural capital. And if you take a country like Argentina, so 60% of Argentina's exports directly rely on natural capital and biodiversity in their production. It's a very agricultural dependent economy. Brazil, it's around 42%. Both of those countries now, if you look at their credit default ratings as judged by credit rating agencies, so Moody's, Standard & Poor's and Fitch, they are now citing drought, flood, climatic events as material risk to sovereign macroeconomic stability, which is having a knock-on effect on creditworthiness, which is having a knock-on effect onto bond pricing. So suddenly you've got institutional investors who are buying debt issued by these countries, and they're saying, what are you doing about your soil policy? Because you're depleting your soils. What are you doing about your flood mitigation policies? And now they're starting to issue green bonds where use of proceeds can go directly towards those areas where they've got small projects, community-led. They're never going to get financed by non-timber forest products, bead making facilities, whatever. This is direct public finance trickling down to where actually it can have the most impact on the ground. There are bankers out there who are looking at this and the funding will come, but I agree with you at the moment is pretty inadequate.
Okay, and any other questions from the audience? I'll just checking that no one else wants to speak. Yeah, are you wanting to speak? No. Kumar, please tell me if there's people online too.
It's not a question. I just wanted to invite you to a session tomorrow at 6:30 in the Reimagine Pavilion. We're going to speak about reimagining conservation, philanthropy, and investment, and some of the ideas that we've begun to touch on how to rethink these systems may be beneficial, and there might be a good conversation to have. So do come if you have time. Everyone is invited.
Okay, thank you. If there are no more questions, I'll just give the opportunity to the panelists to maybe say some final words. Or okay, Thomas wants to ask a question.
Thank you, and I just arrived Hi, I'm Thomas Binet. I'm the head of Blue Seeds, which is an agency dedicated to bridging the financing gap in marine conservation, and very interested. I'm sorry, I missed the first part of the exchange. Anyway, it seems, as I heard here, there are like 2 lines ongoing here, and I was wondering about the question of time in all those project development. I've heard the terms blended finance. I've heard about the fact that we need to develop systemic process, but all of those projects needs time, and which the finance actors, they don't have really. And I was wondering on how to accelerate. We heard about the mainstreaming finance for conservation. I was wondering about how to accelerate this project, how to increase the project pipeline and go quicker up to the end. And I was wondering if you had any suggestion, any top priority. I was thinking about like something like technical assistance, which would be needed in an intermediary in order to make project more ready to invest quicker. So it's just to.
Yes, I mean, we're touching in terms of financial engineering of how do you support innovation and transformation of things. And as you said, we all recognize that we need that these processes need technical assistance. It's not only technical assistance; it's people who have the expertise, and this is certainly missing, because the questions that we're raising are new questions. And so we need to accelerate also training of people who know how to do that for so many sectors. So first answer to the timing thing. The other thing is time. I think Matthew put it very well. Time, nature is as the basis of what we want to transform, and the time of nature is the time of nature. It's our time also. So this is to be integrated in our process, and I think not all the processes for nature recovering need the same support. For example, if you look at an agricultural side, it will be quicker. If you get at an aquatic ecosystem, it's also quicker. Now, I'm a forester by training. Well, it will be 30 years or more that you have in front of you to just restore forest. So you need a different kind of support, and a different kind of partnership. So you said we do not have the time. Well, my answer is we have to take the time.
Thank you. Some final words, perhaps? Matt, Eva?
They're not really final words, but certainly, I mean, we take as multilateral development banks the time to do infrastructure projects. I mean, they take a long time to get to maturity level. And at the same time, you need to allow for natural capital conservation projects. That's the same, you know, it goes through the same projects whether you're talking about infrastructures, you can't rush it. So I think the time has to be given. Of course, the capital markets are not always that patient, but I think they're realizing that in order to have those good investments and to incorporate all those different challenges that we've heard, they need to be patient. So it's patient capital really that we are talking about, and otherwise we're not going to. And just one thing is that we will, I think, see also the requirement. We were talking when we started the conversation about definitions and standardization, and hopefully with the EU taxonomy, certainly with the definitions of what is nature positive investments, this will help also economic sector activities to really be clear about what are nature positive investments. And this will also incorporate some of what the colleagues said, you know, making sure that social consideration, human rights are also incorporated in those definitions of what is a nature positive investment, because without it, it is not a good investment.
I think for me, my final word is actually a warning, because if you look at the true economic value of biodiversity, capital markets globally cannot afford it. we need to realize that we cannot afford the protection of biodiversity with all of the funding and capital markets at this moment in time. And I think the warning there is around actually the groups who are trying to price biodiversity at an asset level. And I would strongly advise against trying to do that and trying to develop financial products that try and price individual biodiversity assets. They're too complicated. The spatial variations are too complex. And I think where we're seeing examples of opportunities, if you look at, for example, carbon and carbon trading, the vast majority of the market don't trade carbon, which is a finite unit. There are only a finite number of carbon credits in the marketplace. The vast growth in the trading of carbon is coming from the secondaries, where people are trading on the price changes in carbon. And so my view is, with biodiversity, if we're going to think about financial products, develop financial products that trade off of the change in biodiversity value, not the biodiversity value itself. Is my final word.
Okay, thank you. Ray, are you still with us? Do you want to say a few words before we close?
I'm still here. Thank you very much. No, I think the discussion was great in that way, that we do need to take into consideration so many different factors to create the opportunities that need to go forward. And I think some of the, I think that I would like to come away from a discussion like this is that we all open ourselves up a little bit to be to new possibilities, and that we actually have these discussions and engagements with different partners, because I think sometimes we get caught up in our small sort of worlds, and that we don't sort of look at a landscape that has all this tremendous value that we could kind of, in a place like Indonesia that was mentioned, how do we capture that value where there's already investment going on from the private sector, where there's all these ecosystem services that could provide significant benefits, and all we need is some long-term capital to invest in that. And then that can be covered over years, as Matt mentioned. So I think we need to find these kinds of models and work together so that we are really investing in nature, investing in conservation, because the outcomes for that are beneficial for people's lives. And so that, I guess, would be my last message. Thank you.
Okay, well, thank you very much. I think we'll stop here. If you want to continue these conversations, I know that the Conservation Finance Pavilion is hosting a social event this evening at 6:30. So don't hesitate to come and continue this conversation. Reassuring. We basically kept the time. Yeah. Seriously.
How do we do that? And we can organize some. I didn't hear full questions. No, the answers.
Oh, and I didn't repeat them, but people who have their mic. Yeah.